If you think buying a home in 2025 means saving up for a massive down payment, think again. Here are 5 simple steps that you can take to buy a home with no money down. And these strategies are being used by thousands of first-time homebuyers to buy a home with very minimal out-of-pocket expenses, even if they have average credit or very little savings. But here's the catch. If you skip just one of these steps, you could end up overpaying or get your loan denied. So in today's video, I'm going to be breaking it all down, everything from the finances all the way to the team that you need to have in place in order for you to buy a house this year without draining your bank account. Okay, so step number 1 is you want to get pre-approved with a mortgage broker and not a bank. And the reason is a mortgage broker works for you, whereas the banks works for themselves. And mortgage brokers, they also have access to a lot of different loan programs, a lot of different lenders, a lot of different types of down payment assistance programs and grants, whereas a bank or an online lender might not have access to those. And a common mistake that I see a lot of first-time homebuyers making is a lot of times they go straight to the bank to get their pre-approval, and what ends up happening is if they don't fit into their cookie cutter guidelines, they automatically get declined, or they're stuck with their rate and their fees and their loan options. Whereas with a mortgage broker, with one credit pull, with one application, they can shop the rate for you. They can also combine a lot of different down payment assistance programs and grants so that it covers not only the down payment, but also the closing costs as well, which is a major key in how many people are able to buy a home with no money down. Okay, so there's really 4 major types of mortgages that are out there. Number 1 is going to be a USDA loan. There is no down payment that's required on this loan, and this can be used to buy a home in rural areas or in outside of the city limits. Number 2 is going to be a VA loan. Again, there is no down payment that's required on this loan type, and this is for those that are either active military or veterans or surviving spouse. The number 3 is an FHA loan. The minimum down payment is 3.5%, and this loan is good for those with lower credit score and also those that have a higher monthly debt load. Then number 4 is going to be a conventional loan. Minimum down payment is 3%, and this is good for those with a higher credit score and a lower monthly debt. And here's where the opportunity is. If you do not fit into these 2 categories, then what you can do is you can actually get a down payment assistance program or a grant program to cover the minimum down payment on either conventional or an FHA loan. Okay, so how grant programs and down payment assistance programs are broken down, they are not separate mortgages. What they are is they're combined to be used with either an FHA loan or a conventional loan. So you must qualify for those specific types of loans to use these grant programs. Then these programs come from several different places. One, it can come from the state. It can be different city or county programs that are available. It can also come from the bank. It can be a national program as well. If you're working with a mortgage broker, they are going to have access to all the different loan programs. But here's a common mistake that I see a lot of first-time homebuyers make. They do not understand the fine print when it comes to getting down payment assistance or grant programs. They automatically assume that it is free money, and that is not the case. It's either broken down into 2 ways. One, is it forgivable? If it is forgivable, does that mean starting day 1, or does that mean I have to live in the house for an X amount of time? Generally speaking, it's anywhere from 5 to 10 years before it actually turns into a forgivable loan. Also, what are the interest rates on these forgivable loans? Because generally speaking, they're a little bit higher than market rate. 2, is there any repayment period? Are they going to add it to my monthly mortgage payment until the second loan gets paid off? Or if I ever end up selling the house or refinancing the house, will that have to be paid back at that time? So there's several different things that you need to know up front to make an informed decision if it's a good idea to take this grant money or not. Also, they can only be used on primary residence only, not on investment properties. But here's a good strategy that you can take advantage of. 1, use the Forgivable grant program to buy a home with no money down. And even better, if you can use that to buy a duplex, which on the other side is already generating income property. Then 2, once that turns fully forgivable, refinance that loan into a lower rate And then all you have to do is live in the property to satisfy the primary residence requirements, move out, rent that out, and then go buy and repeat the process. Okay, so step 3 is really knowing the closing costs and how to negotiate for them. So the closing cost is really outside of the down payment. It doesn't go towards your loan amount at all. And what it is, it can be anywhere from 3 to 6% of the purchase price. And so on a $300,000 house, that could be anywhere from about 12 to 18K. And here's a breakdown of all the fees. There's several different entities that goes into it. Number 1, you have your lender fees, then you have your title fees, then you have your government and tax fees as well, which this is going to change based on from state to state. Some states have a lot higher government fees, some states don't have as much. Then you also have your home insurance, which you pay up front. Then you also have setting up your escrow account, which is paying a portion of your property taxes and your home insurance. Now, a lot of times people do not realize that closing costs even exist, and or they don't realize that you can actually ask the seller to cover these closing costs. Now, this is a negotiation thing. You have to ask in the contract up front, and this is something that your realtor can help you with. So if you ask the seller to cover your closing costs and get a down payment assistance program to cover the down payment, that's how you can buy a house with very minimal out-of-pocket expenses. But here's the thing, you have to have a really good team in order to get this done. You have to have a really strong realtor to negotiate on your behalf. So let's go into step number 4 on how to find a really good realtor. Okay, so you're gonna work with someone that really has experience in these first-time homebuyer programs, that know how to write offers with no money down, that also knows what type of properties are eligible as well. And here's the thing, number of years experience does not equal experience in this current market, because real estate is changing on a day-to-day basis. So you want to make sure that you are working with someone that is actively doing deals in this market so they can advise you best. And here's a big mistake I see a lot of people doing. Either they end up using a family or a friend or someone that works in a luxury market that doesn't know the ins and outs of the homes that they are looking at. And here's the thing, the right agent will help you find the property, submit the offer, and also negotiate on your behalf throughout the transaction. Now, let's go over the last step, which can make or break everything. Okay, so there's really 3 categories that the banks look at in order to determine if they're gonna approve you or not. Number 1 is gonna be credit score. So your credit score, 1, directly impacts the interest rate that you get. So the better your credit score, the better interest rate you're gonna get. 2, it also determines what type of loan program is gonna be best for you, because if you remember when we went over all the major types of loans, FHA was better suited for those with a lower credit score, and conventional was better for those with a higher score. Now, the minimum credit score is really going to be a 620. Now, you will hear a lot of banks advertise that they will go as far down as a 500. And while, yes, that might be true, number 1, you're going to get killed on the rate and fees. And 2, you're going to need a lot higher down payment. Generally speaking, you need at least 10% down. You won't be able to get a grant program with that credit score. So really, that next benchmark is going to be a 620 score. Now, second, they take a look at your income and how much monthly debt you have. And this is by far probably the most important part of the whole loan process, because number 1, this directly impacts your income, directly impacts how much buying power you have or how much you're get approved for. And what you can do if you're curious how much you think you'll get approved for is take your yearly gross income, multiply it by 3 if you have a lot of debt, multiply it by 4 if you don't have any monthly debt, and that will give you a range of how much the banks will approve you for. Then they take a look at how much money you have saved up. And what they really care about too is at the end, how much money you have left over to make that next mortgage payment. And also, they don't want to see any large cash deposits. Now, even if you get the seller to cover all your closing costs, you get the down payment assistance programs to cover your grant, so you're buying a house with like no out-of-pocket expenses, there still are a couple that you need to take account for. So number 1 is you're going to have to put a deposit on the home once you submit an offer after it's accepted. Generally speaking, it's about 1% of the purchase price, but this is not set in stone. You can put even $100 on there. Then you have to pay for your inspection. So the inspection generally costs about $400. Then you have the appraisal that will cost about $600. Now, a big mistake that I see a lot of first-time homebuyers making, they don't take into this account, and also they think just by having good credit, they're automatically going to get approved, and this is not the case. You have to have income in order to support making that mortgage payment. And also what you want to do is really 6 months before you're ready to buy a home, sit down with a lender, have a consult with them to make sure you're on the right track. There's nothing that you need to work on. And with that being said, let's go over the overall timeline of how long it's going to take to get the keys in your hand at closing. Okay, so here's the overall timeline. So again, about 6 months out, you want to have a long consult, and this is strictly just a conversation with the lender, just to identify if there's any areas that you need to work on. You are not trying to get pre-approved at this point, so you make sure you do not allow them to pull your credit, because a credit pull is only good for about 3 to 4 months. Then at the 3 months mark, that's when you'll actually want to get pre-approved. Now the pre-approval process takes about 24 hours. The longest part is just submitting all of your documents. And at this point, that's when they are going to identify exactly how much you're pre-approved for, how much your buying power is, and you also want to make sure that you understand the mortgage payment that's associated with that purchase price. So if you need to adjust your budget or if you need to go down in price, you will know at that stage. Then that lender will send the pre-approval letter to your realtor, and that's when the home shopping process will start. Now, this is variable. It could take you anywhere from 1 week to find a house. It could take you a couple of months, just depending on what you're looking for and the inventory in your area. Then once you submit an offer, the offer gets accepted. That process to getting the keys in your hand takes about 30 days, and you could speed it up. You can do it in about 15 days, or you can take it a little bit longer, just whatever you and the seller agree to at that price. So at the end of the day, it is possible to buy a home with no money down, but remember, it has to make sense for you and your overall goals. And if you enjoyed this video, then you're gonna love the video that I did breaking everything down, everything you need to know on FHA loans.